So in this video, I want to go ahead and highlight why it is critical to synthesize multiple data points when you're doing your analysis on the broader market. See, oftentimes when you consume content about the market, whether it's on YouTube or X.com or any other platform you consume about the markets, you often see individuals pretty much only focus on one data point. And oftentimes that data point is simply just technical analysis, which is just the charts. However, just looking at the squiggly lines in the chart, it does have some utility, but it's honestly one of the weaker data points out there. There's several other data points that you want to be mindful of, and one of the data points I often highlight is paying attention to the macroeconomic environment, right? Paying attention to macroeconomic news. Of course, there's other data points out there. There's monetary policy, fiscal policy. I mean, the list goes on. There's even alternative data. I mean, I'm not going to go ahead and delve into all the other data points out there as I highlight them in all my other videos, but I want to go ahead and show you the importance of it. As you guys can see, it has a huge shift on the broader markets, especially for today. So for example, today we're looking at the S&P 500 Index ETF SPY, right? That's what we're looking at, and we could clearly see that it was a red day. In fact, I'm not saying, by the way, that the trend is broken. In fact, that's not what I'm saying at all. It's been a pretty robust market. Since the beginning of the year, things have been pretty much going upwards. So by no means am I saying that we're looking bad currently in the markets, but I want to go ahead and kind of help demystify why we had this sort of big red day in the market today, because oftentimes people blame something else. You hear people say, oh, it's the insiders, it's the market makers, it's this. And so I want to help, again, demystify why we see certain price action take place in the markets. And so before we go ahead and do so, I also want to highlight different sectors. For example, this is the S&P 500 Index ETF, but I want us to also take a look at, and let me go ahead and pull it up right over here, RSP. Now, RSP, this is pretty much the same thing as the S&P 500, except it's not weighted heavily. It's not skewed heavily to those large tech giants such as Microsoft, Apple, Nvidia. It's equally weighted. And even that was down today. And so this is what you would refer to as market breadth, which is looking at the broader markets. And we see that it was a red day today. But even when we take a look at XLY, which is consumer discretionaries, again, we see this big red day. And if we go ahead and take a look into the finance sector, which is XLF, we see pretty much a red day as well. We also see the same thing kind of take place in tech. Tech kind of held up a bit. But if we also go ahead and take a look into healthcare, again, big red day. And again, I'm not saying that the trend of the market has been broken. Again, the trend has been pretty strong. This is not a video talking about the trend or where the markets are going or what's currently going on. This is a video just highlighting how broader economic news can severely impact the price action of the markets. And so why did we end up seeing today a lot of selling pressure take place? Well, let's go ahead and talk about it. So today, let's go ahead and pull this up. We had some economic data come out. Today is April 1st, Monday, and what did we get? We had the ISM manufacturing report. And so we got this news today that manufacturing in the United States is doing better than people expected. And so you would assume that, hey, this is good. However, there's a lot of nuance when you go to interpret economic data, because again, one would assume that this is great news. In fact, we had Wells Fargo. I'll go ahead and pull it up. Wells Fargo, pretty much, which is the fourth largest financial institution in terms of assets under management in the United States, provide this little economic commentary. I'm not going to read entirely everything that they said. Again, not really a big fan of them, but we'll just leave that to the side. But one of the things I want to kind of highlight what they ended up saying is that when we're taking a look at the ISM Manufacturing Index, which basically shows us how manufacturing is doing, well, we ended up seeing, again, manufacturing is doing well. It came above this 50, this line over here that says 50. And pretty much when you're above 50, that kind of suggests that manufacturing is growing. When it's below 50, well, that suggests that manufacturing is shrinking. And so this time we saw it pretty much go to 50.3, which means that manufacturing is starting to grow after not doing well for quite some time. I mean, you guys could see it basically capitulated for quite some time. But pretty much stayed relatively the same in this range, and now we kind of had this strong breakout in terms of manufacturing in the company. And so again, one would assume that this is good news. However, even though this sounds like good news, there's some parts of the report that made a lot of market participants worried, and that's what caused some selling pressure in the markets. And so what is that? Well, again, I don't want to go ahead and delve too deep into this report, but one thing I do want to go ahead and highlight is that when you take a look at prices paid for manufacturing, that's where the concern comes in, because the report says that the cost of things that manufacturers need to make their products, think about like plastics or metals, it's going up. And so this means that the prices of those things, if they're going up, well, that means consumers will have to pay more. And some people may be wondering, well, why is it that consumers will have to pay more? Well, if it costs more to make something, they're going to pass it over to the consumer. That's just what it is. If I make pies, and I used to be able to make pies for $5, but now it costs me $10 to make pies, well, unfortunately, I'm going to have to pass that cost on to the consumer. And so when we take a look at the broader markets, let's go ahead and toggle over to the S&P 500. Well, that's essentially what's causing the worry in the market. So we saw prices go up when we saw people worry that it might make it harder to lower inflation. And that's where, we have monetary policy comes in, which is basically another pretty much data point that we often talk about. And that's because we're in this tightening cycle. And so everyone's on edge. Everyone's biting their nails because we are trying to wonder, when is the Federal Reserve going to start cutting interest rates? It has not happened yet. And of course, we know that they're in the works. There's been the summary of economic projections where they mentioned that they're looking to cut rates, but they've been saying that this year that they're going to be doing 3 rate cuts, but we haven't seen it. So everyone's kind of biting their nails. Again, people are worried that inflation may still be a persistent problem. Of course, also something else that was out there is that the jobs in manufacturing, right now we have to kind of understand this. While it showed that they're doing okay, the numbers in this area, they're not growing much. And so that's also a sign that not everything is perfect. And so again, you could just read the headline showing that manufacturing is growing, but again, there's a lot of nuance into this, and that's the concern that pretty much brought down the broader markets. Again, when you look at market breadth, looking at several different sectors, we saw a lot of things pretty much sell off. And so one thing people have to understand is that the market does not like uncertainty. When there is uncertainty, people will get a bit skeptical about holding capital in equities. Why? Equities are risky. And so why do you want to hold money into stocks or, just individual, companies when there's some risk going on, right? When you could just put it in something like a treasury or different asset classes. I'm not going to go ahead and touch on that, although we have had some crazy trade ideas take place within the Push and Profit Private Group, such as we talked about gold, which is GLD, that actually did pretty well today. We'll actually just kind of pan over to that. Of course, there's some other little assets that we talked about, or different asset classes that we talked about within the Push and Profit Private Group, which, by the way, if you're interested in joining the Push and Profit Private Group and kind of getting my overarching view of the markets every single day the markets are open, as well as my trade ideas, I mean, we've been killing it on the trade ideas, then make sure to check out the first link in the description below, because there's a link to join for just $39.99. Again, you could cancel at any time, guys. So quickly, just wanted to plug that in because I know there's some individuals interested in joining. But with that said, I simply wanted to make this video to highlight that it's not just always about the squiggly lines on the charts. I know oftentimes you see individuals say, oh, well, look at the RSI, the relative strength index, or the MACD, or the moving average, or the Fibonacci's. And again, I'm not trying to say that it's bad to look at technical analysis. I don't discredit technical analysis. Of course, you have the individuals who just have their charts all lined up with lines. Not trying to say anything and slander that. Technical analysis definitely has some utility, but I'm trying to say that there's other data points that you want to be mindful of, and you want to use it in confluence with technical analysis. You want to synthesize all these data points, and so that's the importance of this video. I want to show you guys that you want to look at the market from a multi-dimensional approach, and that's going to help you understand what's currently going on, so you're not scratching your head and saying, who's rigging the market, right? And again, I'm not saying that the market isn't being manipulated by some nefarious players. Of course not. There are probably some instances of that bleeding into the markets, but again, I want us to have a better view of what's going on and what kind of triggers stuff to end up happening, or what could influence the market. And so that's why I wanted to go ahead and highlight the importance of economic data and just show you guys how it influenced pretty much the broader markets for today. Of course, we did have some trade ideas that still continued going. Those are exclusive ideas that I shared within the Push and Profit Private Group, but we won't delve into that. But hopefully you guys found some value in this video. But before you guys go, consider checking out this next video right over here, or if you have done so already, also consider this video right over here, and I'll see you guys on those next videos. Take care, guys.